Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock with news the US and India are driving global demand currently. But first, in the week ahead, the major event for us will of course be the Wednesday RBNZ Monetary Policy Review, the last one for 2024. And markets have priced in a full 50 basis points cut for the OCR, a setting that will have to last them through to mid-February. South Korea will also review its policy interest rate benchmark this week. In the US, they will release a packed set of data until Thursday New Zealand time, because for them this week ends with their major Thanksgiving holiday and the related major retail activity that kicks off the period until the end of the year. Over the weekend, the US manufacturing PMI for November stayed in contraction territory, hardly moving from the prior 2 months. But their services PMI rose strongly to a much faster expansion and a 32-month high. There were no inflationary signals in this survey either. Business expectations were the highest level since May 2022, reflecting optimism about potential interest rate cuts, stronger economic growth and pro-business policies. And Canadian retail sales rose unexpectedly in October and now for a fourth straight month. Excluding car sales, which were strong in September, a small correction was expected. But in fact, the non-car retail activity rose very strongly. Perhaps the recent Bank of Canada interest rate cuts are working there. They have trimmed 125 basis points since May this year and now have an official cash rate of 3.75%. In India, they again reported strong expansions in both their factory and service sectors. But worryingly, there are tangible signs of serious economic overheating, with cost inflation pressures near extreme levels. Something will break there soon. And climate overheating could also leave the economic situation in a messy place. In China, a sell-off in Chinese stocks deepened on Friday as disappointing tech earnings hurt sentiment already weakened by concerns over Trump's imminent return. In Europe, their PMIs were disappointing again, with the expansion in their services sector ending and it joining contraction that they've had for a while in their factory sector. In Australia, their November PMIs were also disappointing. The US Treasury 10-year yield is now just on 4.41%, a little change from Saturday at this time. A week ago, it was 4 basis points higher. And the price of gold will start today at $2,716 an ounce and up another $10 from this time Saturday. That makes the weekly gain $149, or up 5.8%. And oil prices are holding at just over $71 a barrel in the US, while the international Brent price is still just under $75 a barrel. And the Kiwi dollar starts today at 58.3 US cents, unchanged from this time Saturday, but down 40 basis points in a week. Against the Aussie was still lower at 89.7 Australian cents. Against the euro was still at 56 euro cents. That all means our trade-weighted index starts today at just on 68.3. Little change from Saturday, but down 40 basis points in the week. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.